Welcome to the Daily Vibe Casting. We are diving straight into today's trending posts across global tech, major finance moves, and the shifting dynamics of geopolitics. This is your sharp, energetic roundup. We're aiming to get you completely up to speed on what matters most today.
Exactly. Our mission here is to really cut through the noise, find that critical signal from everything buzzing on the feeds. We're moving fast, yes, but we're making sure you get the context, those high-value insights, so you walk away with, the concise depth you need for today. Let's jump right in.
Okay, starting with some...
Not at all. And the reaction, highly polarized, as you'd expect. Figures like Nikki Haley, well, they immediately jumped on it, arguing it emboldens Hamas. But if you look at the actual data on long-term conflict, it suggests these dynamics are, far more often tied to local governance issues than these international symbolic statuses. It's a policy move, really, designed to ratchet up diplomatic pressure.
A diplomatic domino effect. Okay, now let's shift to domestic policy, but with huge international ripples. Post 2 from @ZeroHedge reads, White House says doctors may be exempt from H-1B visa fees.
Right, the H-1B program. Highly skilled workers. This policy is a very direct response to a real crisis.
Yeah.
The U.S. is looking at a physician shortage, potentially under 24,000 short by 2034. That's a massive number.
Wow.
But here's the connection, the bigger picture. This adjustment, it isn't purely economic. It comes right after India shifted away from Russian oil imports. That was a huge move, saved India billions last year.
Interesting timing.
Exactly. So this exemption, it really suggests visa policy is being used strategically. Maybe it's a geopolitical lever, to influence key allies. It sort of challenges the narrative that this is just about domestic reform.
So what looks domestic is actually a quiet geopolitical chess move. Fascinating stuff. Let's pivot now to, people making similar moves globally, choosing where they want to live, where they want to operate. Post 10 comes from @Balaji's, who notes the trend. This is actually already happening, as there are 250,000 plus Brits in the UAE alone. It is also why we will see startup societies and network states.
Yeah, and the stats back that up. British residency in the UAE doubled since 2010. People are definitely moving for clear economic reasons, big tax advantages, lower crime rates, things you can actually measure. And this trend, it's really the definition of a startup society unfolding. Think about places like Kazakhstan's Solana economic zone. They aren't just after the super rich. They're targeting middle-class professionals. How? By offering specific regulatory clarity, especially for emerging tech like blockchain. People are literally voting with their feet, looking for better governance.
Okay, and finally in this segment, a major environmental threat. A stark reminder of the scale of global challenges. Post 13 from @EddieBuild is quite dramatic. He says his team is stuck. My team is stuck in Shenzhen with a super typhoon incoming. This is the 20th largest storm in human history. The only option to get out is via private jet.
The scale here is really what makes it a critical headline. Typhoon Regasa, yes, it's the 20th largest storm ever recorded. It's bearing down on Shenzhen, super densely populated, prompting this huge evacuation, 400,000 people.
Just incredible numbers.
And if you zoom out, the data is pretty sobering. Peer-reviewed studies, they show about a 10 to 15% increase in typhoon intensity globally since the 70s. Climate change is a factor here. So this isn't just a weather event, right? It's a structural threat, especially to these global manufacturing hubs like Shenzhen.
Okay, let's unpack this financial and tech feedback loop that everyone's talking about today. This is where that structural risk and, reward really intersect. Post 3 from @Lit Capital nails it. Nvidia investing $100 into OpenAI in order for OpenAI to buy more Nvidia chips.
That's $100 billion. I mean, that's one of the most strategic moves we've seen in tech for a while. It absolutely locks in Nvidia's dominance. They're essentially funding the deployment of, 10 gigawatts of AI data centers?
10 gigawatts.
Yeah, and they'll all be running on Nvidia GPUs.
Hold on. That level of vertical integration is just staggering. You mentioned a historical parallel earlier, right? DuPont GM back in the 50s. Is this kind of integration actually a weakness now? Or is it just, what you have to do in this winner-take-all AI race?
Well, it might feel necessary in this kind of speculative race, yeah, but historically, this is exactly where regulators start paying very close attention. The DuPont GM ruling basically establishes that if you control both the supply and NVIDIA's chips and the demand, OpenAI's massive infrastructure needed for those chips.
You stifle competition.
Exactly. For a critical foundational component like this, it stifles competition for everyone else. That Supreme Court case, it ultimately forced DuPont to divest its GM shares. So while it cements short-term market power, You're looking at enormous future regulatory risk down the line.
That context is so important. Okay, now let's bring in the third major player in this loop. Post 9 from @SiliOmar connects the dots nicely. Oracle says OpenAI committed $300 for cloud compute. Oracle stock jumped 36%. Oracle runs on Nvidia GPUs. Nvidia just announced they're investing $100 into OpenAI.
Right, this is the definition of tight economic interdependence. That reported $300 billion deal, it gave Oracle its best single stock day since 1992. 1992. That tells you how massive this is. So OpenAI's funds, partly influenced by that Nvidia investment you mentioned, will inevitably cycle right back. Back to Oracle for cloud services, back to Nvidia for the GPUs they need to run those services. These three companies are basically operating as one highly leveraged, deeply intertwined financial ecosystem. It's quite something.
And this high-stakes environment, it's clearly showing up in the leadership mentality, too. Post 15 from @Bucko Capital quotes Larry Page, and it just captures that sheer aggression. I'm willing to go bankrupt rather than lose this race.
That quote, that's like a flashing red light if you're thinking about traditional ROI, return on investment. When founders start talking about bankruptcy as an option, they're signaling, look, this is driven by pure speculation, growth at any cost. It's not about proven profitability right now. And this kind of aggressive, non-ROI focused mindset, that's precisely what we saw in previous tech booms, like the late stages of the dot-com bubble, right before things peaked. It tells you the stakes are, well, as much psychological as they are financial at this point.
Okay, shifting to competition strategy slightly, because not everyone is playing this closed system game. Post 11 from @Alibaba Qwen announces their release of Qwen Image Edit 2509. They're calling it a game changer for open foundation models. So why release something that good for free? Especially when proprietary models are, printing money.
Alibaba's playing the long game here. It's a strategic move, and it's backed by a huge $53 billion infrastructure investment. Their open source strategy is all about accelerating market penetration. Build a global ecosystem fast, challenge those closed models.
Get the developers locked in.
Exactly. And the research suggests open source AI adoption is something like 30% faster than closed systems. So they're prioritizing, setting the standard globally, getting developers on board rather than chasing immediate proprietary revenue. It's a different bet.
Let's pivot now to some major market and industrial shifts. Post 4 from @Unusual Whales is a big one for commodities. Global policy too. Breaking. China will ban new steel capacity and reduce production per Bloomberg.
Yeah, this is a massive strategic shift for China. They're tackling these really deep-seated issues. Overcapacity, yes, but also significant environmental damage from that sector. Remember, China makes up, 54.8% of Asia-Pacific steel revenue? This isn't a minor tweak.
Huge impact.
Huge.
Yeah.
So reducing supply while global infrastructure demand is still high, that could significantly disrupt global prices. It also signals this longer-term pivot in Chinese industrial policy, maybe towards quality and environmental rules over just sheer volume.
Okay, moving to infrastructure innovation. Post 5 from @SawyerMerritt gives us a glimpse of the future for EV charging speeds. New WS, Tesla's first 500-kilowatt supercharger station in the world, is under construction in Campbell, California.
This is a really substantial leap for EV infrastructure. For context, right, the V3 stations most people see are 250 kilowatts. So 500 kilowatt capability, it supports that faster 400V to 1000V architecture. What does that mean?
Faster charging.
About 30% faster charging, especially for vehicles like the Cybertruck that are built to handle it. This directly pushes back pretty hard, actually, against that narrative that EV charging infrastructure is lagging way behind fossil fuels. It shows serious progress.
And in health tech, the Oura ring seems to be absolutely surging. Post 6 from @Mark Gurman has the numbers. New W. The maker of the Oura ring is raising nearly $900 million, making it an over $10 billion company. It's sold 3 million rings in the last year or so and is on track for over $1.5 billion in revenue next year.
Yeah, jumping from a $5 billion valuation just last year to over $10 billion now. That's explosive growth, especially for wearable tech. And the core strength here isn't just, convenience, it's accuracy. Studies show Aura sleep tracking is getting close to clinical polysomnography. That's the gold standard, what they use in sleep labs.
That's impressive.
It is. And crucially, that $5.99 a month subscription, that creates a really sticky, reliable revenue stream. That's what helps stabilize this high valuation, much more than just selling the ring once ever could.
Makes sense. Okay, finally in this segment, EV manufacturing world. An investment giant makes a full exit. Post 8 from @Holmar's blog asks a simple but pretty loaded question referring to BYD. What did Warren see?
Right. Warren Buffett, through Berkshire Hathaway, completely exited his stake in BYD. This was after an incredible 17-year run, a 3,890% return.
Phenomenal.
Unbelievable return.
So that question, what did Warren see? It's really asking, does the Oracle of Omaha see trouble ahead for BYD? His exit, despite that massive return, it could signal concerns about BYD's stability. Maybe amid China's economic slowdown, it sort of reverses BYD's earlier success story where arguably they were outpacing Tesla in some key metrics. It looks like a strategic, maybe cautious retreat.
All right, quick check-in on the most volatile corners of the market. There's been some serious movement overnight in crypto. Post 7 from @WatchGuru shows massive corporate buying in Japan.
George Tarrant.
Metaplanet buys another 5,419 Bitcoin worth $633 million. They now hold 25,555 BTC worth $2.8 billion. Yeah, this specific buy, especially from a Japanese company like Metaplanet, it looks like a clear corporate strategy. They're likely hedging against the yen's devaluation, right?
Yeah.
Amid all this ongoing global economic uncertainty. And financial analysis consistently suggests that this kind of large-scale institutional adoption, it tends to increase Bitcoin's long-term value potential. That's separate from the short-term swings.
But the short-term swings definitely hit Ethereum hard. Post 12 from @Kobisa reports, breaking! Ethereum falls as much as negative 11% in overnight trading and hits its lowest level since August 8th.
Oof. Yeah, that immediate dip, it might be directly tied to the Federal Reserve's recent rate cut, the 0.25% one. Lower rates, they often drive more volatility in risk assets like crypto as capital shifts around quickly seeking yield.
Right.
So while the online chatters all zoom out, look at the big picture, technical analysis right now actually hints at a potential buy signal, which suggests that for some investors, maybe those with higher risk tolerance, this drop might be seen as just a temporary correction.
And wrapping up the crypto segment, post 14 from @BTCarchive really emphasizes just how unstable things got. The largest Bitcoin and crypto liquidation event of the year just happened.
Yeah, a massive $1.2 billion liquidation event. That's where highly leveraged positions just get wiped out, boom, overnight. Historically, these kinds of mass liquidations, they can sometimes, maybe often, come before sharp upward price moves, like the market structure cleanses itself, resets.
A painful reset for some.
Definitely painful for those caught in it. And this level of extreme volatility, it's really amplified by high leverage ratios and also the ongoing regulatory ambiguity in key markets, like India, for instance.
Okay, we covered some major ground today. We mapped geopolitical shifts from those diplomatic recognitions in Malta to the subtle leverage of U.S. visa policy. We detailed that incredible financial and tech interdependence, Nvidia, Oracle, OpenAI, all tangled up. And we tracked key market movers, like the Oura Rings surge and Buffett's, strategic exit from BYD.
Yeah, and the amount of vertical integration we talked about in AI today, it really is unprecedented. That $100 billion Nvidia investment into OpenAI, plus the massive Oracle cloud commitment, it creates this incredibly tight loop. Now, if you connect that back to the historical antitrust example we discussed, DuPont GM, which forced a major divestiture because one company basically controlled both supply and demand for a critical component. It raises a really important question, I think, for you to consider. Given this vertical integration, given the zero-sum growth mentality we heard about from Larry Page, and just the sheer scale of speculative investment, how much longer can these colossal tech giants really sustain this current growth trajectory before, regulatory intervention becomes almost inevitable?
A question that should definitely be top of mind for every investor and policy watcher out there. Use these key nuggets to stay sharp and well-informed today. We'll catch you on the next Daily Vodcasting.